Good evening, everyone. This is James coming to you from Dividend Stock Talk. How you guys doing today? Well, it is Sunday, September 17th. It is 9:30 p.m. Oh, sorry, I don't even know what day it is. All the time. That's what happens when you retire or semi-retire. You don't really have to work anymore. Schedule's all messed up. Anyway, that being said, here at Dividend Stock Talk, we like to invest in dividend stocks, mainly to receive weekly and monthly income. For the past few years, I've been doing this, and we've been doing rather well. Getting the double digits. Once I got triple digits. That was a happy year. But for the most part, we like to show people how to safely and securely get double-digit returns. Whether you're looking to get 1% a week or 1% a month or even 2% a month, or whatever your goal is, it's possible. But you have to stick to it. You have to be willing to learn, and you have to be willing to ignore what other people say. Only because other people aren't right all the time. I mean, people tell you what it is they want you to know. Okay? The powers that be, so to speak, they want you to invest for yearly returns. They say, oh yeah, you can get 1 or 2% per year. Hey, that's great back in the day. Well, not even back in the day. Way long time ago. Back in the 40s, 50s, and 60s, that was fine. But ever since they invented the options and they opened up commodities market to the average everyday person, you can make as much money as you want as long as you're willing to accept the risks that come along with it. Because if you want risk-free investing, no such thing. Perfect example. Let's say you want to deposit your money into a risk-free bank that offers you, 1% nowadays they're offering you. Now, is it really risk-free? You put your money in there, at the end of the year, you earn your 1%. But the risk there is you're actually losing money because inflation and the value of your dollar decreases every year. So what a dollar is buying for you this year, $1.01, which is your 1% return from a bank, which is trusted by and insured by the FDIC to make sure your money is guaranteed. Yeah, guaranteed to give you 1%. However, just because you're guaranteed to earn your 1% per year, it doesn't mean that 1% is actually doing you any good, because you're actually going backwards. If inflation is going up 2 or 3% per year, or 4% per year, or whatever the inflation is, I really don't know. Don't really care because I don't really know. And the reason I don't care is because I don't buy into that global beliefs. If I did, I wouldn't be doing what I'm doing. Plain and simple. But considering I invest in dividend stocks for weekly and monthly cash flow, I don't have to worry about the 1 or 2% or 3% inflation that happens every year. Now, the higher reward you're going to get. Now, if I can tell you you're going to double your money in a week, guess what? So is your risk factor. So if you want a balanced financial life, you have to have some risk. Okay? Now, if you want to invest in a dividend stock, there's plenty of them out there that offer you 2%, 3%, 4%, 5% that will be equal to what the inflation is. Now, the only bad part about that is when you equal to the inflation, you're still losing money. What do I mean by that? If inflation is going up 3% per year, that means if you put, let's say, $100 in, and at the end of the year, you have 103. And let's say your 103 equals the amount of what that $100 would have bought you this year for next year. Okay, so that way you're staying equal with inflation. However, that 3% that you made is taxable depending on how you have your holdings. What do I mean by that? It means, like most people, they like to have their investing account in their own name. And rightly so. It's their money. They can do what they want with it, Say, hey, my money, I want to invest it the way I want. Great, fine, dandy. However, when you invest in your personal name, like James's investment portfolio. It's in my name. I have to pay taxes on, or income taxes on, whatever interest I make on my money. So if I make 3% on my money, let's say it's $1,000, and 3% of $1,000 is 30. Okay, Uncle Sam's going to want his cut, and personal income tax rate can be as high as 40% depending on where you live. Where I live in Florida, it's right around 28%. So for every dollar I make, 28 cents has to go to Uncle Sam. So I don't really make $1, I make 72 cents. Okay? So what you need to do, just to break even, you have to make if the inflation rate is 3%, you're going to have to make at least 3.5% to 4% just to break even. Okay? That being said, to make money, you have to make more than 4%. Okay? So if you're not consistently making double-digit returns on your invested dollar, then someone is not being honest with you. Because there is a way, I shouldn't say that there is a way, there are plenty of ways, plenty of ways of investing to make double-digit returns. Okay, now a lot of my students like to do just dividend investing, which is great. Don't get me wrong, there's 12 months of the year. There's on average 4 weeks in every month. Now, in order to invest in dividends, you have to own the stock for at least 2 days to qualify to collect a dividend, to be the registered owner of a stock. All right? So if you wanted to collect a dividend on, let's say, IBM, and IBM was paying its dividend on, let's say, the 4th on Monday, you have to own that stock or buy that stock before the EX date. Now, when investing in dividend stocks, there are 4 dates you need to keep in mind. 4 dates. One is the announcement date, which the company announces when they're going to pay their dividends and how much money they made per share, per investor, blah, 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 all that stuff. That's the announcement date. The next date is what they call the EX date. That is the last day the stock trades before the dividend is paid. Now, the third important date, which is kind of like the most important one, is what's called the date of record, or the registered date, or the registered owner date, or the settlement date, whatever you want to call it. It's the date of record. It's the day that in the books of the corporation that is paying out the dividends, they need to know who gets paid how much money. So if a company like IBM has, a couple billion shares out in float, and their profit is, let's say, $1 per share, and they're paying quarterly, so that's 25 cents per quarter going to each and every stockholder. So if you own 1 share of IBM and the EX date is on the 4th, you are entitled to 25-cent dividend. If you own 1 million shares, then you're entitled to 25 cents per share for all your shares, which million, which would be $25,000. That's pretty nice. Basically, what I'm coming to say is, dividend investing, you could buy the stock before the EX date, sell it after the date of record. That way, you collect the dividend, you collect a small profit from selling the stock, and then just go and buy another one. So if the EX date, let's say hypothetically, is the 4th, Monday the 4th, you have to hold it for 2 or 3 days to get to your settlement date, which then you can turn around the next day and sell it for a profit. If you can. You can't always, but for the most part, that's why we create the software to tell us which stocks have done it in the past. Now, basically, if a stock has done it in the past and all the indicators and all the signs are saying, hey, it's going to do it again, or there's an extreme high probability that it'll do it again, then that's the one I want to buy. Okay, so that's 4 days. 1, 2, 3, 4. You're out, you sold, you bought it, you collected the dividend, and now you're out looking for another company. So let's say you find another company whose EX date is on the 8th. So you buy that one. You wait the 2 trading days for the date of record. You collect that dividend, and then the next day you sell it. And then you find another company and you buy that one. You wait the 2 days, you collect the dividend, you turn around and sell it. And then you go buy another one. You wait the 2 days, collect the dividend, and then sell it. And you do it over and over and over again. The nice thing about that is you can collect 10 to 20 dividend checks per month if you invest properly and you use some good judgment. That's basically all it comes down to, is good judgment. You'll look at the stock. If everything is pointing in the direction where, hey, this is a stock I would like to buy and I would like to hold on to, great, buy it. Collect a dividend, turn around, resell it. There's another stock right around the corner, right down the street, around the bend, however you want to look at it. There's another company somewhere. Every single trading day, there's at least one or more companies going EX. When I say going EX, that means it's the last day it trades before they pay out their dividend, blah, blah, blah. Anyway, the strategy is pretty simple. You buy the stock before the EX date, you sell it after the date of record, collect the dividend, move on to the next company. Do it over and over again. But you got to make sure it's a good company. Make sure the historical performance is there. Make sure they have good quality management in shape. Make sure the cash flow is positive. Make sure it's a company you would not mind buying and holding. Plain and simple. And you too can get double-digit returns. You know, a lot of people say, why don't you just buy the dividend stock and hold on to them? They increase in value. Yes, they do. They pay a dividend and they increase in value. Almost all of them do it. And that's why people invest in dividend stocks. However, I only have a certain amount of money, and I'm sure you only have a certain amount of money to invest. Now, if you have enough money to invest and live off 3 and 4% interest in your money that you're going to get from a company, like IBM pays 3 or 4%, whatever it is. I don't know. I'm just looking to get that little tiny bit. Take a little bite, move on to the next one. Take a little bite, move on to the next one. If you can afford and you're comfortable with buying a stock and holding on to the dividends and just doing it over and over again every 90 days, just collecting your dividend every 90 days, fine, great. I'm not telling you to do anything. I'm just telling you what works for me. If you want to pay attention, do your own research and do what I'm doing, hey, fine, great. But I'm not telling you what to do. I'm telling you what I do. If you want to do the research and say, you know what, that guy's right, I'm going to buy the same thing he's buying, do your research. I'm going to show you what I do, and I'm going to give you reasons why I do it. Okay? If you want to do it, hey, that's fine. That being said, let's jump on in and see what happened. All right. Don't tell me well, there it is right there. It hasn't settled out yet. Darn it. Wow. Holy cow, can that be right? We were at 51,000 last week. How can I possibly be at 61,000 this week? That's like a $10,000 return for 1 week. Oh, that's pretty cool. I'm going to have to go back and find exactly what I did, see if I can do it again. Basically what I did is I bought all these positions. They're still sitting here. Because that's why I'm disconnected. Because see, this usually settles out on Saturday. So why am I seeing all this information? You know what? Considering I'm seeing this information now, I'm going to copy it and paste it. That way I have it on record to show later. All right. Dun, 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 dun. There we go. Whew. Saving that. What am I going to say on this settlement? I spelled that wrong. Let's get out of there. Okay, so that what we were looking at. Now I'm disconnected now, so what I'm going to have to do is I'm going to have to shut that down and re-upload. some strange reason. Oh, that one's connected. Okay. I'm not even tied in, I'm yawning. It's not right, it's not fair. Anyway, this is all the information from Friday. Okay, these are the closings I did. Things all right, 4 filled, 4 canceled. I don't see how that happened with MDLZ. That frustrates me. MDLZ, did I make money on MDLZ? Let's look at MDLZ. That says I made $450 off MDLZ. The only way to find out what you really made is to come here, and this actually gives you the, there it is right here. Okay. I made $450 for the day, but overall I lost $80. Now that makes me unhappy, but you know what I'm going to do? Considering I have another 2 weeks for MDLZ, because they're not doing dividend for another 2 weeks, I'm going to go in again and buy MDLZ again. And see if I can eliminate that $80 loss. All right, I'm going to have to sign out and then sign back in again. So you guys got to sit tight with me so that I can do this over again. Running a little slow, are we? Do the changes to my computer, blah, blah, blah. I already said yes. Why are they asking me again? It's beyond me. All right, we're just waiting for it to pop up. But yeah, so if you guys are interested in actually making double-digit returns, you have to take the risks that go along with double-digit returns. Now, I'm going to show you 2 different strategies this evening. One is just plain, ordinary dividend capturing. Buy the stock before the EX date, holding it through the date of record, and then turn around and reselling it for a small profit after the date of record. That way, I don't know if that's psychosomatic or if I'm tired. I'm not tired. It's like almost 10 o'clock. What was I saying? Oh, the dividend capturing. Yeah, it's a simple, easy strategy. You buy the stock before the EX date. I'm going to show you where to get the EX dates. With Thinkorswim, they're all right here. You go to the Market Watch, and under the Market Watch, all right, let's go to scan. See, the Market Watch has a bunch of different things you can use. One is quotes, one's alerts, one's to visualize, one's the financing rates, and the other one is calendar. Now, to be totally honest with you guys, I've never used any of these. Ever. The only one I ever used is the calendar. And the reason for that is I found something that works for me. There's so much stuff, so much noise out there that it is confusing. And it can be nerve-wracking. So I just don't deal with it. I don't even bother looking. There's so much stuff on Thinkorswim. They're not allowing me to do that because I got to sign in again. It's still updating. That's not doing me any good. Okay. There's so much stuff on Thinkorswim, it is a challenge to keep up with it. So I only go to the Market Watch and I use the calendar. Now the calendar allows me to look at dividends, earnings, whenever they have a conference call, whenever they had a stock split, Econo Day event, futures liquidation, market drive, and ETFs dividends. Okay, so I can look at all that stuff if I want. But you have to ask yourself a question. Are these reliable. The earnings report, you can't set your calendar to. You can't say, all right, on the 15th of every September, they're going to pump out their reports to find out what's going on in the company. They don't do that. So we don't do that. And also the earnings, they could be a good report and they could be a bad report. It could be a good report and the stock prices go down. It could be a bad report and the stock prices go up. There is no continuity to the information. And you never know what kind of information or how it's going to affect the stock. So I don't do earnings. Conference calls, it could be a good call, it could be a bad call. I don't know. And have I ever used it before? I never used it, so I cannot say. So take that one out there. Stock splits, I love stock splits. But stock splits aren't on a daily basis. Okay, there's not somebody splitting every single day. So it is sporadic and it doesn't give me the information that I'm looking for. And the information that I'm looking for is something that's going to help me make money today or make money this week. Now, if I know a stock split is coming, yeah, I'll make a play on it. But it's not something that I can teach because it's not, actually I couldn't teach it, sorry, I didn't really mean that. It's not consistent and it's not 100% accurate. So I can't use that one. Econo Day event. I have no idea what that is. So I cannot be using it because I can't compare it to anything else. All right, let's log into this account. I'm going to need to log into the other account also because that one is not connected either. All right, those are that. Okay, the Econo Day event, I have no idea what that is, so I can't use it. Okay, and do I want to find something else to learn? No. Do you know why? Because what I'm doing works for me. Am I happy with 1 or 2 or 3% per week? Yeah, I'm happy with 1 or 2% per week. So I don't want to learn anything new. Futures liquidation, I don't really know very much about it. Can't help you out. I do know some things about futures, but I don't want to go into it because if you're here, you want to learn about dividend investing and how to use the dividend as a precursor to your investing strategies to help you get a safe return. And future liquidations and information on the futures, it's not always accurate and it's not always a safe bet. So I'm not going to do that one. Market drive, that's something new, have no clue what it is. And ETF dividends, yeah, I got to stick that in there because ETF dividends can be good. However, ETFs do not have 25 years or more historical performance of increasing their dividends to their shareholders every year. Okay? You want to stick with companies that increase their dividend payments every single year because believe it or not, worst case scenario is if the stock market goes down and I have 1,000 shares of this, 1,000 shares of that, 1,000 shares of this, and I can't trade them because I don't want to trade and lose money, that means I have to collect, or I get to, let me rephrase that, I get to collect the dividend every 90 days because most companies pay the dividend every 90 days. So you have 90 days, 90, from one dividend payment to the next. So if you wanted to buy IBM, and IBM has a dividend every 90 days from September 1st, or let's find, all right, double G. Oops. Double G is Gold Corporation. Oh, they're paying a 2-cent dividend. No, I don't want to chase 2 cents. That's right off the bat. All right, Garmin. Okay, let's look at Garmin. Garmin's paying a 51-cent dividend. Okay, they announced it on, what was that, June 9th? The EX date is the 13th. Ooh, look at this date of record, which means you only have to hold it for 2 days. Buy it on the 12th, hold it for the 12th, the 13th. The date of record is the 14th, so you can sell it on the 15th, and they're paying out their check on the 29th. So there's your 4 dates right there. Anyway, all right, so they're paying a 51-cent. And I don't remember where I was going with that conversation. Darn it. I should have cue cards so I know where I'm going with each conversation. Oh, well. I believe I was saying about 25 years worth of increased dividends. That's right. Every 90 days. Okay, Garmin is having their EX date on the 13th. The date of record is on the 14th. Right here, the 13th to 14th. Okay, so let's say you sell it on the 15th. Okay? First thing on the 15th, which is Friday morning, you sell. I think, all right, great. First thing Monday morning, who am I going to buy? Look at this. 3 companies right here. AVGO offering $1.02. Broadcom Limited, $1.02 dividend. Okay? And you have to buy it on the 17th. Because, well, you can't buy it on the 17th. You have to buy it first thing on the 18th. First thing Monday morning, you buy it on the 18th. Oh, hey, lo and behold, that's tomorrow. Okay, so you buy it on the 18th, and you have to hold it through the date of record, through the settlement date. So you can sell it on the 20th, which is Wednesday. Okay, who's ready to buy Wednesday? Oh, there you go, Las Vegas Sands, paying out 73 cents. So you buy up Las Vegas Sands, and you hold it for 2 days. Oh, look at that, 21st, you sell it on the 22nd, which is the day after the date of record because you held it that long. And then this week here, oh, and look who's available right there. PM, who's PM? I have no idea, but they're paying $1.07. Philip Morris, hey, pass me a cigarette, someone. Hey, I can't blame them. They've been around for over 100 years, and they've been increasing their dividends for quite a bit. Not 50 years worth of increased payments, but they do pay a good dividend. I'm not saying that I'm condoning cigarette smoke. Can't stand it. I hate what those people do. However, they run a good company. You don't like that one? Fine. Go to MDLZ. MDLZ is Mondelez International Incorporated. Great. Okay, so you buy them. They have the EX date on the 27th. The date of record is the 28th. Boom, the 29th, you're ready to buy something else. The 29th, here you go. CAH. Who is CAH? Cardinal Health, paying out 46 cents. Look at that. The EX date is the 29th. Date of record is the 2nd, which means on the 3rd, you can sell again. So, boom, where are we? The 3rd. Booyah. Oops, let's get out of there. Oh, you know what? This account I cannot see, so let's get out of there. Can't even spell my name right. Try that again. There you go. Market watch, calendar, boom, there you go. Okay, so let's go here. Clear filter, all stock companies for the 18th tomorrow. So on the 18th, which is tomorrow, we have 20 companies that are going EX tomorrow, which means if you want to qualify for the dividend, you're going to buy it first thing in the morning. Okay, and who's worthy of playing today? Okay, not ESB, not 218, not them, because they're all below 10 cents. Okay, we'll start out with DGAS. Who is DGAS? Delta Natural Gas Company. They're paying out 18 cents. The EX dividend date is the 18th. The date of record is the 19th. So, boom, the 20th, you're buying someone else. Who do we got on the 20th? Check it out. LVS, that's Las Vegas Sands. LTC Properties, Harvest Capital Credit Corporation, Getty Realty, Glacier Bank Corp, Campany, Financier, Richmond, whatever. Anyway, get all these companies to look at. Now, why are there more companies here than there was a couple seconds ago? Because look, I took out the W, and the W just so happens to be right here, the companies that have weekly options. Okay, boom, look, almost empty, almost nobody. But you clear that out, and these are all the companies that are trading. Okay, tomorrow, 20 companies. Tuesday, 24. Wednesday, 15. Thursday, 28. Friday, 17. So that's quite a bit of companies going EX next week, or this week coming up. Okay, you want to do all that work, all that research, be my guest. Fine, dandy, go ahead. But that is totally up to you. You find something that works, great, stick with it. Anyway, that being said, let's see what we are looking at. Not that one, let's look at the other one. Here we go. Now, that's not it. There we go. This is dividend stock account number 2. Now, love it. PXD. That's right, PXD. On Friday, we missed. All right, where are we? Okay, PXD. Okay, PXD started out the year at 196. It quickly found a high within a month at 233. From the 233, it took her about a month and a half to drop down to 126. Climbed back up to 175. Found the low of the year at 104. That's like $100. That's, oh my God, that's over a 50% loss. That's gotta suck. Within 6 months, you lose 50% of the value. Whoa. Bet you a lot of people weren't happy about that. Depends on which end of the trade you're at. Someone once told me, it's like, if you're not making money in the stock market, then you're on the wrong end of the trade. I know, pretty plain and simple to think about it. Okay, so she actually makes the low of the year right around January. Climbs up to a small trading range of 157, trades there for about a month. Takes about a week for it to jump up to 181, and she spends about 3 months at 181, and then she drops back down to the 128, 129 area, which is where she is now. Actually, she's at the 130 area. She's at 136 at the moment. So I sold the 137, 138. I forget which one I sold. Damn it. Huh. Anyway, I was off by 7 cents. That much I do remember. So what happened? So rather than lose out on that position, I turned around and bought the 137. So it was a 136, 137. It was $1 spread. Now I could have lost some of that money had I not bought that 136, the 137 back. So I bought the 137 back. Now I'm the proud owner of 5,000 shares of PXD. At, what's the price they're at? Open this up. 135 we bought it. That can't be right. If that's right, first thing in the morning, I'm selling this puppy at 136.93. That's like a $2 almost $2 increase in a couple of days. That's nuts. Okay, let's look at PXD. PXD. All right, PXD last traded at 130. 136.93. Now remember, we got it at 135. Okay, so we have a couple of choices. Choice number one, we can sell first thing in the morning 50 contracts at the current rate at 290 because we bought it at 135. I could sell someone the option of buying it from me the exact same price I just paid for it. Okay, so let's put 50 contracts in, and let me just give you a quick scenario of how much it's worth. Okay, $14,500 for someone to pay me for the privilege of buying this from me at the exact same price I paid for it. That, my friends, is what is called a covered call. I went in last week and tried to do a credit spread. Okay? Rather than losing my position on the credit spread, now a credit spread is where you buy one option, and you sell off another option to offset your price to get you better leverage, a better bargaining point, a better bargaining position. If it doesn't go your way, you have several options on how to get out of that trade in order to be more profitable. Now, the only reason we bought PXD is because we had 15 days to the EX date, which means that last Monday we knew we had 15 days before the EX date to come. All right? And it allowed me to make 3 option plays on this company before it pays out its dividend. That way, I have 3 chances to make money on this one. And what happened was I did 50 contracts at the 136, 135, 136, or 136, 135, 137, whatever it was. And I missed out by 3 cents because, see, she closed at 136.93. Okay, so had she went over 137 and stayed above 137, I would have just made a small amount of money, which I believe was like 30-something% on my investment, whatever my investment was at the time. Now I'm going to show you a couple of credit spreads so you understand what a credit spread is as opposed to a covered call. Okay, so I think I am going to do this play for tomorrow, and I feel bad about that because that's $14,500. Ooh. All right. Let's see who's on the list for this week. Now, tomorrow's the 18th. Okay? So we're going to look at companies 10 days from tomorrow. Now, 10 trading days. So this is 5 here. So this would be day number 6. So that, wait a minute, you can't really count tomorrow. 10 trading. Yeah, I suppose you can. 10 trading days. So that's 5. So we'll look on what is the next one. The 2nd. October 2nd. And there's nothing on October 2nd that has weekly options. Okay. If I clear this, these are all the companies that have options. Or they may or may not have options. Okay, PKE, that's Park Electrochemical. ESE, Esco Technologies, 8 cents. I'm not sure how to even chase that one. DX is Dynex Capital. DGX is Quest Diagnostics Incorporated. CLI is MacCall Realty Corporation. And BNS is Bank of Nova Scotia. Ooh, 63 cents. Lovely. Okay, so I can get in and buy any one of, this is what we're going to be looking at, buying one of these companies because they're doing their EX date here. Now, if I wanted just to do the dividend investing, if I just wanted to do the dividend capturing, I would take a look at these companies. watch what we're going to do right now. BNS, put in BNS, Bank of Nova Scotia. All right, that's a nice looking chart. Not the greatest in the world, but it's nice looking. She starts out the year at 60 bucks. It takes about a month to find the high of the year at 68. It takes about 6 months for it to drop to the low of the year at 34. That's like a 50% decrease in value. And people still own this stock. Oh, okay. Anyway, I'm a trader. I don't buy and hold because I just don't like buying and holding. I like my money to work for me. I've been working since I was 13. I'm 53 now, so that's 40 years of working. Okay? I want my money to work for me now because I have no idea how long I'm going to be here. I may be here 5 years. I may be here 10. I may be here for another 40 or 50 years. I don't know. Do I want to work again 40, 50, 60 hours a week? Hell no. I want my money to work for me, spend an hour or two doing this stuff, and then moving on. That being said, all right, she finds the low of the year at 34.88. Another 6 months later, she's back up to the 60 area where she started out the year, and this is where she's trading right now. Now, this chart looks good because the stock is not at a high of the year, and it's not at the low of the year. It's somewhere in between. It's where I like to be. And it's actually in an uptrend, which is nice. I like to be in an uptrend because they say the trend's your friend right to the end. Okay, so she's in an uptrend now. That being said, let's move up to see what the seasonality looks like. Because although all that is nice and fine and dandy, what has this thing done over the last 10 years when the dividend's getting ready to come up? Okay, now this is the third quarter dividend for this company. Okay, now I don't know when their physical year is, because this could be the first quarter dividend for their physical year and their third quarter dividend for the calendar year. Okay, because each company has different dates. They have a physical year when the company actually started. All right, because companies don't always start January 1st. A lot of them start, hey, let's start business on Tuesday. Sure, why not? Okay, so Tuesday, there you go, October 3rd. All right. That being said, okay, Bank of Nova Scotia. Let's take a look at the seasonality, see what they've done in the past. Now, seasonality, if I explained this to you before, the blue line represents this year's stock movement. The red line represents whatever you have it set for. If you have it set for 3 years, then that's what it represents. I personally have mine set for 10 years worth of data. So I want to look at 10 years of stock prices, and I want to compare it to how does it perform in the third quarter before the EX date. Okay, this dot represents Friday. Okay, so the next 10 days, which should be somewhere around here, will be when the stock goes EX dividend. Okay, so how has this thing done in the past? So let's bring this up. Let's look at this much data here. Okay, this is where I am now. Okay, let's look at the red chart. From this date, and I don't know about you, and I can tell you, I can get a third grader, someone 10, 11, 12 years old, to tell me that this is going to go down for the next couple of weeks. Okay? Here to here, down. Then from that, it's going to go sideways. If it was going sideways, I say, great. But this puppy's going to go down. Do I want to invest in that one? Hell no. All right. CLI, Mac Cali Realty Corporation. Never heard of them. Don't know who they are. But you know what? I honestly really don't care. And you know why I don't care? Because I'm a numbers person. What is this? CLI. Now, when I say by numbers person, 1 + 1 = 2, no matter what language you are speaking anywhere on this planet, 1 and 1 = 2. 2 and 2 = 4. Numbers don't lie. If the numbers look like they're going to go in my favor, there you have it. Okay. CLI closed out at 23.23. She started out the year at 20.35. Went up just a little bit to 21, dropped back down to the 19 area, and she's been trading in the 19 area for about 4.5 months. Jumped on up Oh, during that 4.5 months, she found the low of the year at 1690. 1690. Okay, took a few months for it to get up to the trading range of 28, which is, she traded there for a few months. And then all of a sudden, she drops down to a trading range of 23, which is where she is now. Look at all that red. What's happening in that real estate over there? Oh, wherever this real estate company is. I'm thinking Cali. What is it again? Mac Cali Realty. Cali makes me think it's in California. I don't know. If I want to find out more information, all I do is right click on it, and this little drop down box shows up. Shows event details, create an alert, blah, 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 blah. Here we go. More info on Cali. And this drop box shows up. A quick quote on what the stock is doing right now. Do I want that? No, don't really care. Market depth. That could be invaluable information. That's up to you to figure out. Trade grid, again, could be valid information. Quick chart, we got it open right over here. Position summary, I don't have a position on it. Do I want to trade it? I could if I want. Do I set an alert? Maybe. Do I want to analyze it? Might be a good idea. For you. For me, no. TOS charts, hey, I'm already here, but look, they have other charts here. All these different charts I can use. What are they? Don't know. Don't care. All right, profit. Never used it. Don't know what it does. If any of you guys know what it does and you think it could be beneficial, fine, let me know. Here's where you go. Company news. This could be valuable information. Now, ThinkBack is a nifty little gadget that allows you to use data from the past to say, wait a minute, had I bought this last year, what would have happened on this date? What would happen on that date? It allows you to test your theories using the historical data. But my advice was, come up with your idea first, okay? Then use the data. Go back a year and see if your idea actually works with the data using the ThinkBack scenario. If it does, hey, great. I've used that for years. I haven't used it in many years because I've used it many years ago to test my theories and to make sure that I was right. And all the ThinkBacks I did got me to where I am today, which allows me to say, hey, the stock did this many times. If I use this percentage on this date, because the EX date is here, that's what got me here. Hours and hours, days and days, months, years and years of using that tool to test my theories. And it just so happened my theory is where it is now, the dividend capturing. And then I used that information to create a calculator, some software that actually does all those calculations that took me hours to do. So that is valuable information. Okay, that's a valuable tool. No information there, it's just a tool. Fundamentals, more great information on the fundamentals. Can tell you what the company does, who's in charge, who owns what percentage of the stock, how many shares are in float. Lots of information with the fundamentals. If you want to do your research, there you go right there. Company news, fundamentals. There you have it. Okay, so CLI is offering 20 cents. They hear this could be a new bottom. Could be, I don't know. Because as you can see, the stock kind of looks like it's an uptrend, and it's like it was going sideways here and it dropped down. This could be a new bottom here, and it could continue sideways. But if you look at the big picture, this thing has been trading from like almost 19 to 28 in that trading range for the whole year. So it's right there. So she's at 23 now. Let's take a look at what does she normally do over the last 10 years in the third quarter coming up into the EX date. That is my seasonality chart. And here we go. Blue represents what it's doing this year, and this is what it's done over the last 10 years. And let's see where she's going based on historical performance. Okay. Again, this is a tough one to see, but you can see it kind of going in a downward direction. So do I like that? No, I do not. So let's jump on DGX, which is Quest Diagnostics Corporation. DGX, there we go. Now DGX, let's just quickly take a look at this. Okay, that, my friends, is flat going sideways. I like that. Only if everything else is pointing in the right direction. Let's take a look at the chart, the regular chart. Oh, that's lovely. Look, she starts out the year at 54.74, creeps on up to 61 about a month, then it creeps on up to 74, goes sideways for a couple of months, and then it just marches on up. Look at this. You get your triple bottom here. It's one here, one here, one here. It's triple bottom. See, 1, 2, 3. And then it's nothing but up, profit taken, up, profit taken, up, profit taken, up, profit taken, up, profit taken. This could be a new bottom right here in this section. I don't know. Or it could be a slightly downward spiral. Don't know. But historically, this thing should be going sideways for the next couple of weeks. And if that's the case, let's find out what DGX has to offer us if we so desire to invest in it. All right, go there. Then I jump on to the options. I'm going to go to the vertical. All right, she last closed at 104.96, which means DGX. Helpful if I like this. Now they're offering monthly dividends. Guess what? I'm not hanging out for the whole month, tying up my money for the whole month for this company. I don't care who they are. And what I'm going to have to do is this one right here. And look at that. I can make 22 cents off of this one for 30 days. Nope. Because I'm not doing this one here. Even though this one's closer to the money and it has a higher profit. It's $1.44 profit, which is a nice profit if you think about it. However, in order for me to make the money that I want to make on it, the stock has to go up. Do I want to deal with has to go up? No, I do not. I would like to deal with it would be nice if it goes up or if it goes sideways. All right, so this one doesn't work for me. That's why I like to go into here. Market watch. Click on this right here. Oh, wrong one, sorry. Right here. Come down to public N through W, slide all the way down here, and just look at stocks that are offering weekly options. Because I am all for weekly cash flow. That's it, weekly cash flow. Thank you very much. All right, so there's nothing on Monday offering a weekly cash flow. So let's look at Comcast, CMCSA, all right, Comcast. All right, let's put CMCSA, Comcast Corporation. Oh, that is an almost beautiful chart. Almost, I say. She starts out the year at 29, which is right around 26 bucks. Slow and steady. Very small amount of increase right up until for about 5 months, where she's still at 27, which is not very good. And from there, over the next 6 or 7 months, she makes a high of 42.18. Goes sideways for a little bit, and then she has 4 down days in a row. So, and this day right here, on the 7th, was a big down day. So I'm going to want to find out through, let's go take a look at it now. CMSCA. CMCSA. That might be better, right? All right. I might want to find out by looking at the company news why that had that big drop there and why it's a continual 4-day drop. So normally I would not buy this because I need to find out why we have 4 down days in a row. If they can come up with a logical answer, great. If they can't come up with a logical answer, I want nothing to do with it. So I'm not going to show you that one, even though it is, because it is a, what do you call it? A weekly option. Next one is GPS, which is the gap. Yep, the gap, 23. Let's check them out. GPS. Okay. You may think this is bad, but it's kind of not. So let's take a look at it and see how it looks. Starts out the year at 39, goes sideways, and finds the high of the year at 46. And right about 39.29, that's about 3 or 4 months, she slowly drops to find a trading range 22 to 25. She goes sideways. The last couple of days, she jumps up to 27.99. Now that could be because the dividend's coming up in 10 days. See, 5 days ago, she was right here. So that's 15 days prior to, that's 3 weeks prior to the EX date. People could be jumping in because of that. I really don't know. You want to find out exactly why? Go look at the news, company news. Why is it jumping from 24 up to 27, 28, other than the fact that they have the dividend coming up in 3 weeks? Okay, the 23 cents, not a lot of money, but it's guaranteed money. Share of the profits, a lot of people like that. Okay, let's find out what the seasonality looks like. That's pretty clear cut thing. Do not invest in me till now. 2 weeks, that's when the dividend's coming out, paying out their dividend. Then she goes sideways and up. All right, so this is a no, but if it was a yes, let's see what they, no, I'm not even going to do that. Not going to do that. CSCO, what is that, Costco? No, wait a minute. Cisco, there you go. All right, so look at CSCO. CSCO, Cisco Systems Incorporated. Okay, that's kind of going sideways, flat at the moment, but let's take a look at the normal chart and see what that looks like. Okay, so the normal chart in this one, hey, it looks pretty darn good. She starts out the year at 22, jumps up to a trading range of 24, trades there for a month and a half, checks out that bottom again. It looks like a triple bottom, like bottom there, and bottom here. For that third bottom, look at her, she went way up. That's nice. Okay, so the second bottom, the double bottom, she hits, okay, so you got a double bottom here, and she jumps up to hit a trading range of 28. Travels about 3 or 4 months, finds a new low, and tests out that bottom again to make it a triple bottom. Alright, so she gets a triple bottom, and she bounces way up to the trading range of 34, where she's kind of now at 32.44. And this, my friends, is unmistakably an uptrend, see? Buy, profit, buy, profit, buy, profit, buy, profit. And now we got 1, 2, 3, buy. So at 32.44, this one should give me a good payout. CSCO, now Cisco closed at 32.44. So I should be looking at the 35, 132, which is right here. 47. See, this is not good. That's only 4 cents. I mean 3 cents. It ain't worth it to me. And the 32 and a half. Nope, because then the stock has to go up. That does not make me a happy camper. she's going to go up 6 cents for me to make this. Now, that's not what I like to do. So I would probably hold off in investing in this until tomorrow morning. Take a quick look at it, find out what she's going to do. If she moves up a little bit, she moves above that 32.50 mark, then I might think about getting it. As a matter of fact, I might even put in a, I don't want to bother with it. It's not the way I do things. The numbers aren't there. It's not in the right position. The stock has to move up for you to make money. That's not what I like. So let's go back to here. And now, oh my goodness, we're way over here. American Outfitters. I gotta show you at least one. American Eagle Outfitters. Okay, that's a dandy looking chart. You got 1, 2 bottoms here. This is make 1, 2, 3 bottoms, triple bottom. So she's in an uptrend. Great. She starts out the year in a trading range of 11. Trades about a month and a half there. Jumps up to a trading range of 13.80. Does 2 months there. Jumps on up to 15 to 16. Travels about 4.5 months, 5 months. Then for some strange reason, she finds the high of the year at 1953. Drops down for a big low at 10.53, which is almost a 50% decrease. All right, from here, she finds that quadruple bottom, or that triple bottom, depending on how you look at it. Okay, there's 1, 2, this could be 3. That's definitely number 4 for the triple bottom, and she's going to shoot up. So she could probably shoot up probably on 17, 18. Who knows? I don't. Okay, so this is a nice little sideways uptrend. So that looks good. Let's see how much they're offering. Okay. A, E, I, O, U are the vowels. A, E, I, O, U are the vowels. Okay. American Eagle Outfitters. They closed up at 13.30, which means I'd be looking at the 12.5, 13, which is right here, and that would be 44, which is only 6 cents. That could be a 10% return. Is it 10%? 60 bucks. I'm putting in 4,450, so that's 60, 10, 15. That's 15%. All right, so if you want to do a 15% return for 5 days, let's take a look at that, because it's not that bad. Let's get out of there. $15% return. See, the most I can make is $300. I'm putting in $2,200, which divided by 7. 22. Yeah, that's right around 15%. So this is a 15% trade. If and only if the stock stays above 13. Okay, so buy vertical AEO 22 on September 2017 at the 12.5 13 call spread at 44 cents. You know what? Let's change it to 40 cents. Because I don't know if I really want it. Right? Whoa. Oh, okay. Can't do that because I'm out of money. But that's how you do it. All right, not there. Okay, so if I was here, as long as the stock stayed above 13, which is where she is now, if the stock goes up, you make your 15%. If the stock stays the same, which means goes nowhere, you still make your 15%. And the stock can even go down just a little bit, and you'd still make your 15%. That is what we like. That is the only way I trade these options in this account. That being said, I'm going to look for some questions. If I get some questions, great. If not, I'm out of here because I'm getting a little tired. A little tired. Okay, so what do we got for questions? No questions. Yay! All right, you guys, no questions. This is James from Dividend Stock Talk, where we invest for dividend stock for weekly and monthly cash flow. I think tomorrow we might, I don't know, sell off that option, pick up that nice big fat chunk, or should I just sell the whole stock and just collect a couple $1,000 for the stock price and then trade the rest of the options? I don't know. Anyway, this is James, Dividend Stock Talk. You guys have a great day, and I will see you tomorrow.